Good morning, ARMR Insiders. Welcome to our morning meeting of this virtual hedge fund we call ARMR Investing Way. I appreciate you guys spending time with me this morning and every morning. So as a virtual hedge fund member, you got to think of yourself as a portfolio manager, okay? So you're sitting down at the desk. We're going to go over the risk monitor review. We're going to talk about top stocks to watch. These are top shelf investment ideas, swing trading ideas that we may add to the portfolio in the near future. Okay, I'll take any questions you might have, throw it into the comment section of this video, whether you're watching it now or later. ARMR Insiders use the Slack room. If you got a question, I'm happy to answer that. We're going to make this tight today. There's not a lot of moving parts here. When the market gets this insane, when volatility goes berserk, it gets very simple what our focus needs to be. I'll go over that in a second. But before I dive into it, don't forget, as a portfolio manager on the desk, you've got to figure out your risk tolerance, your goal, your strategy. Go ahead and execute that on your own and be the smart money. Now, risk monitor review. Everything starts from the risk monitor, flows from there. Risk monitor's red. It hasn't changed. It's not going to change. Okay? Not anytime in the near future. I mean, certainly it'll change at some point, but not even remotely now. I feel that there is an overwhelming amount of questions I'm receiving about buying the bottom, calling the bottom, finding the bottom. You know, the bottom doesn't have to be found. It's not hiding. It's not a game of hide and seek. It's going to be very obvious when the bottom is in. A couple of things you need to look for. Number one, volatility has to compress again. When volatility is going berserk and you have huge two-day rallies, those are paw prints of a bear market. Conservative capital, aggressive capital. Conservative capital has no interest in putting money to work in this market. It doesn't matter what wild swings you see during the day. Oh, I could have done this. I could have done that. Is that your strategy? Are you an aggressive day trader? If you're not, then it doesn't make a difference what the market's doing on a day-to-day basis from the standpoint of I could have done this or that. What it does matter to you is that the swings are so enormous, like unprecedented swings. Trillions of dollars of swings in 30 minutes. If you're a conservative investor, you have no interest in this market, and you don't need to. You don't need to. It won't be hard to find the market bottom. It will show up in two very simple ways. One, volatility will compress again. Two, you'll see the pattern form. Bottoming wedge, double bottom, higher low. So you'll get the rip off the bottom, consolidation, higher low, double bottom, something like that. A wedge formation. It's very obvious, but it takes time to build all of those formations. And there's that little gremlin sitting on your shoulder saying, it's going to be a V bottom. The market's going to go straight to all-time new highs. You're going to miss it. That's all you got to do with that guy. You're not going to miss it. You'll see it. It'll set up. And I guess here's the third thing, the bonus thing. As an ARMR Insider, as an ARMR Report subscriber, here's the bonus. The ARMR Algos will show us the way. The ARMR Algos that make up the risk monitor showed us the way to protect capital. We got out near the all-time high. What more do you need to know? Why keep second guessing it? We might get long at higher prices. We might get long at lower prices. The risk monitor is going to tell us it's going to go green. When it goes green, we're going to put capital to work. Between now and then, you don't want to chew up your account trying every little thing you see because you feel like you have to buy the bottom. That you have to avoid at all costs, in my opinion. You're executing a different strategy. you're an aggressive investor, you're day trading, go at it, go do your thing. But I'm talking about large tranche of capital. Most of the capital, when I speak to all of you, most of the insiders, you're looking to build investment portfolios. That's why you're here. And you're using the risk monitor as a guide. So today what I'm saying is it's not even close to going green. So there's nothing you're missing except for wild volatility. And wild volatility and huge two-day rallies are classic bear paw prints. So just be patient. A couple of things to consider, big picture macro decisions now. We've already talked about how to execute, what the algos are saying. So now let's talk big picture, what's going on in the market. I wanted to share this chart with you and talk about TLT. The action in TLT yesterday was nothing short of stunning. And I would have to say a bit disturbing. The 10-year yield, this is the 20-year bond you're looking at, but the 10-year yield from its low yesterday was down about 12.5 basis points. And by the close, it finished up 19 basis points. It was a huge move in yields. What I'm saying is yields went up enormously yesterday. Just a wild move in yields. Okay? Something we haven't seen except for 2 other times going back to 1998. So we're doing research back to 1998, over 27 years. We've only had 2 times where the 10-year yield moved in such a dramatic fashion. Once was November 9th, 2016. The first time Trump was elected. The second time was in 2008. January 23rd, 2008. Huge move. That's yesterday. This is the 3rd time in 27 years you had a move that big. I'm trying to share this with you so you understand the enormity of what happened yesterday. That's not a big enough data set for us to guess what's going to happen. In 2016, the market went higher after that wild swing in bond yields. And of course, in 2008, it was the start of a major financial crisis. I don't know what's going to happen in 2025. But if you look at the technical picture of the stock market in 2016, and you look at the technical picture of the stock market in 2008, what do you think 2025 looks like? What do you think 2025 is more similar to? I'll let you make that decision. I think you know where I stand there. I'm not saying another financial crisis is around the corner. I don't know. But I do know when you see those types of moves in 10-year treasury bonds, caution has to be the cry. Okay? Because something's unhinged about our equity market. You think it's fun that it was up 8% in 30 minutes? That's unhinged. And wild swings in treasury bond yields, not normal. We're in a market that's not normal. And so if you're applying a strategy you've been executing for a couple years of a bull market when volatility was normal, and you try to apply it now, do you think that's going to be an appropriate way to run money? I'll let you think about it. You think about it, okay? I'll share with you one more chart on the way out here. I said to you the other day how important to this story the Chinese currency is versus the US dollar. The Chinese are threatening to devalue their currency. You're looking at a chart here of what the currency has been doing. It's been pretty stable, that white line, okay? And what the currency versus the dollar is doing now, okay? Which is starting to weaken. When that currency goes up like that, it's weakening versus the dollar. Now that's not a majorly aggressive move yet. but it is the beginning of something different. The Chinese are no longer pinning their currency to a relatively quiet level, which is what they normally do to facilitate world trade and all the things that they're doing. And they're saying, hey, if you're going to hit us with these tariffs, and now it's going to be 106% because Trump's threatening to increase it more on tomorrow, I think April 9th or something, or April 12th, maybe next week. One way for China to get around it is to devalue their currency. It's always been an Achilles heel of the global markets that China will devalue its currency. Keep your eye on this chart. They're starting to devalue. So you say, why do I care about that, Brett? 8% swings in the market in 30 minutes, massive swings in interest rates, which are almost unprecedented. One time being during the great financial crisis. And now a currency breakdown. These are like black swan type events. Way, way on the other side of tail risk, nowhere in the middle of a bell curve. And so I'm just saying to you guys, we're not in Kansas anymore. That's what I'm saying. So whatever you do today, understand you're in a different environment. Simplify what you're doing. Manage your risk from a position size standpoint. You want to try some things? I get it. But make sure your position size is commensurate to the volatility and insanity. Okay? Those are my thoughts on the way out this morning. I hope you guys found them helpful. Anybody got questions, throw them in the comment section. I want to have a wonderful trading session. And remember, at the end of the day, think for yourself. I'm just sharing ideas with you and how I interpret them and how I intend to run my own capital. You figure out how to run yours. Be the smart money. Take care, guys.